Hello friends, we are going to be talking about RSI. RSI basically is a trend following indicator and it is called relative strength index. So I am using TradingView here and I'm just going to go through a few charts to show you what RSI is and what you can do with RSI. Here we are looking at RSI basically for swing trading uh, or positional trading. And this is to be used with these type of trading only on time frames that are daily, weekly, or monthly. Please don't use this RSI at least at this setting of 14 for intraday trading uh, because that is not advisable. Now this is the RSI, and this you can easily add to your screen by going to indicators, and then you can just type, just type your relative or just type RSI. And there you have relative strength index. I have it marked as a favorite here. So, and since it's already added, I won't do that again. So this is how you can add RSI to your screen. This is the TradingView platform. This is basically a charting platform which allows you to basically add various stocks that you are interested. This is a free version that I'm using. Please bear that in mind. And RSI only allows two indicators to, um, TradingView is now allowing only two indicators to be used. So if you see, I have RSI and I have a MA ribbon. Volume is not counted as an indicator here. So basically, I cannot add more than two if I wanted. Earlier it was three, now it's two. Now, RSI, there is something called settings in RSI. If you see here, this first tab is called the input tab, where the RSI length is 14. 14 means RSI is going to look back at 14 candlesticks of the time frame that you have chosen. Since we've chosen the daily time frame, it's looking back 14 candles at their close. Can you see the source here? There is close, open, high, low. So we'll keep it as default close. Then you also have something called show divergence. You can show divergence here, but let's remove that. And there is a MA type. By default, this is SMA. SMA basically is a simple moving average where it divides the closing price by 14 periods and gives us the average price. And then there is something called EMA, so exponential moving average. EMA basically does not divide the price totally by it doesn't divide the price totally by all the 14 periods, but what it will do basically is it will give more weightage to the recent candles. So I have selected EMA. MA length. This red line that you see is the MA length, and standard deviation is 2. Just keep it as default. Okay. Time frame is chart. Rather than put any interval here, keep it as chart so that when you change this, RSI changes accordingly, and wait for time frame closes. You have to wait for it. Now come to the style here. So RSI, I made it black for my convenience. This is not the default color, and this is RSI based ME, moving average. But since we've chosen EMA, it will be EMA here. So there is upper Bollinger Band. All this is selected by default. There is no need to touch any of this. Please don't touch any of this here. And then there is visibility. Again, by default, it's selected here. Don't do anything here. Now, there is something called overbought and oversold. So, if you look here, RSI upper band by default is called 7 is at 70, and lower band is at 30, and the middle band is 50. I have kept it at 50 here. If you see this dotted line here, this is the lower band. If you see the dotted line here, it is the upper band. The black line is the RSI 14. The red line is the EMA 14 period. So what normally what market traders how they read the RSI is that when a security, for example, if you see the security is going down here and it's close to 30 line. See, if I keep my cursor here, RSI is showing as 35, right? RSI, if you look here on the left hand side bottom, RSI is showing 34.41. So when the security, let me go back in the chart. Can you see here? Price has gone down. And if you see here in 2023, if I go for the date here, it's 2nd Jan 23 and the RSI is at 23.38. Now, relative strength index at, at a 14 level, which is the default level that all platforms give you, means that the security or the stock in question is oversold. What do I mean by oversold? Oversold means there was so much selling that it got oversold. It went below 30 or touched 30. So it is oversold because it is sell, 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 sell here. Finally, it bottomed out here. There's no guarantee that it will bottom at 25, 26, but this is just for your knowledge. Anything touching 30 or below is considered by the market generally to be oversold because too much selling, oversold. Similarly, when price goes up, if you see here now, price has gone up to, RSI has gone up here to 82. Now, this is above the 70 mark, and so it is said that security has been overbought. Why overbought? Because buy, too much of buying. So it is considered as overbought. And if you notice here that once the security is overbought, you will see some sort of pullback. And you see this pullback here. This pullback is mirrored by the RSI. So RSI basically is a trend following indicator and the values range between 0 and 100. And there is a formula for it. But since we are not in a maths class, uh, you can look this up on Investopedia and you will get more details on this basically. I will not go into something that is easily available on the net because this doesn't help you trade. It will just give you an understanding. And I'm trying my level best to give you an understanding without going into the mathematical formula. But I'll tell you whatever is important to know, what will help you to trade better and to understand RSI. So RSI will always be between 0 and 100. No matter how much the security is oversold, it will never be -1 or minus 0.1. No matter how much it is overbought, let the security go as high. Even if this goes up to 1 lakh, right now the price is 31. If this goes up to even 3 lakhs, RSI will never be basically more than 100. And you rarely see it at 100 since 70 is considered to be overbought and 30 is oversold. Normally you will see here, sometimes it may go up to 80, 85, 90. Here it may go below to say around 20, 15, but that happens very, very rarely and not in securities which are large caps or mid caps. Rarely will you see that. Now remember one thing, you are not going to be buying simply on the basis that now RSI is oversold here and since the RSI, I'll go here, since the RSI is oversold here, let's buy it. We'll get it very cheap, right? It's oversold here. It's 23 price because you're seeing on the chart that the price has gone up. Does not mean it will always go up. Remember that any security can remain oversold or overbought for long periods of time. So please, this is just for your understanding. RSI is just a indicator which will help you confirm your analysis. You never trade only on the basis of RSI or any other indicator. What we primarily do when we look at a chart is first we pay attention to price action and then we look for confirmation from various things as to where the price is, where is it in relation to where it was in the past, what is the volume, where are we with relation to moving averages, trend lines, support and resistance, chart patterns. RSI is just an indicator which will help you, but you do not trade simply on the basis of this. Now, there are some people who are basically Some people who will teach that when the uh, RSI is around 30 and it crosses the signal line, this is a buy signal. Can you see here? RSI has crossed the signal line here, and the RSI is and the RSI is here. So you will buy here, and then you see you are making money. And then when the RSI closes back and crosses from top to below, you will sell here. Please don't do that. I am not part of those people who are going to advise you this foolish thing. So please don't do that. So here we see that RSI is making these sort of figures. So this is like a sort of like a double top, and then the price is coming down. Now RSI is forming his own chart patterns, but just look at it. Don't get overtly excited here. Okay. And then RSI is doing this. So RSI is basically a trend following indicator. It dances along with the price. And RSI goes up when the average gains are more than the average losses over the last 14 periods, because we have kept 14 here. And I say period, not daily candle, because it can be weekly also. You see here, RSI will work on, RSI is still working here on the weekly candle. Okay. And if you see here, RSI is basically sort of formed a double bottom here. It became oversold at 26, then again became oversold here. And you cannot even see, I mean, let me yeah, this gives us a better view. So RSI basically has come down here. So you can see what is happening on the chart, and RSI is following the price. But sometimes what happens is that the price will go up and the RSI may be going down. So that is called divergence. Now, let's see whether we can get a divergence here. If you see here, price is going down here, RSI is also going down. Price is going up. RSI is also going up. So, RSI again up, then it started going down. Let me see whether I can get some divergence. RSI is coming down here, RSI is coming down here. Okay, RSI, we have a huge candle, huge volumes, and you see RSI going into the oversold zone. So let's look at another chart. Let's look at this chart. Now, let's look at Abbott India. Now, RSI, price is coming down, RSI is coming down. Let's look for some divergences. RSI divergence basically means that the price is going up, but the RSI is not going up at that level. Now, if you see here, this, if you see here, let me show you something. Can you see here? RSI has made a high on the basis of this price point. Then price has made a higher high, although it's a green candle followed by red candle. But if you see here, this is a higher high compared to this high, but RSI is not making a higher high than this high. So what you can do is you can draw a trend line here. This is a divergence, meaning that although price has made a higher high, RSI has made a lower high. What that means is divergence, meaning RSI is showing that the average losses over the average gains are more in the last 14 periods, so price is likely to drop. That as soon as you get this, do you start selling? No. This is just an early warning system for you to understand what divergence is. This sort of divergence is called regular divergence. When price makes higher high, but RSI does not make higher high, but it makes a lower high, then it's called divergent. That means prices are likely to come down. Remember, likely, not guaranteed. Okay. So I showed you one sort of regular divergence here. And if you see here, Price has made another higher high. But here, RSI has also made a higher high, so it's fine. Let's look at some other charts. Let's look at ACC. So, price, we're looking at RSI. Can you see here? Just see where my cursor is. RSI 73, price has gone up. RSI is at 83. Then you have a higher high, but RSI is at a lower high. So again, trend line, regular divergence. Price makes a higher high, but RSI makes a lower high is called regular divergence. It's the other way around also. Sometimes price can come down. See, price can come down and RSI may be going up. Let me see whether I can find an example. So it can happen that price is going down, but RSI is not going down, it's going up. Let me see whether I can find it here. So you understand what regular divergence is? RSI normally dances with the price. The price goes up, RSI goes up. Price comes down, RSI comes down. But when the price goes up, but the RSI comes down, that means there is regular divergence. RSI is not happy and it's not increasing. Why? Because the formula is basically that it is plotting the average gains over the average losses over the last 14 periods. So when that doesn't happen, you will see a divergence here. Now, if you see here, price, price is here and price has gone up. Now, price has gone up and then price has come down. It has come down, so RSI also come down. But see this. Can you see the RSI line going upward? That means RSI is basically signaling that though the price has come down, and see this is also down, it's going up. So there is a chance that prices are likely to rebound. There is a chance, not a guarantee. Please do not buy just on the basis of divergence. Do not buy when the price is under moving averages. Of course, I will teach you all that in the course, but don't buy solely on the basis of any indicator or a candlestick or a chart pattern blindly or a trend line or a support or a resistance. You have to look at the entire picture before making a decision. This is your hard-earned money. Do not take it lightly. I don't. It's my responsibility to teach you how to trade properly with risk management and keeping your emotions under check with proper trading psychology. And I will try my level best to make you a good trader. So, this I showed you is kind of regular divergence where the price has gone down, but the RSI has gone to a lower high. This this lower bottom. So this bottom is a higher bottom compared to this bottom. So there's higher high, higher low. So but RSI is giving you a higher low. So I know these terms are confusing. There is a high and there is a bottom. So there is higher high, higher bottom, lower high, lower bottom. I'm just telling you how it is. So this is how you use the RSI. Now basically it depends on various trading strategies. On the trading strategy, how you can use RSI. Most traders keep it at the 70 and 30 level. If and when you become experienced in the market and you decide that 30 is not that oversold, I'm going to make it 20 and 80. You can do that. But please backtest it. Largely the market follows 70-30. You need not be a sheep and follow the market. But you need to use your common sense and backtest whether RSI 20 and RSI 80 is giving you better trading results than 70 and 30. There you are on the second tab, 70 upper band, 30 lower. You can make this 80, make this 20. Now, let's come to the middle band, RSI 50. So, RSI 50, basically, when the price is above RSI 50, price is in a strong uptrend. Price, can you see here? Price is RSI 51 and price is in a strong uptrend. Can you see here? Price is in a strong uptrend if it is above 50. And then it remains above 50. So as long as the price in the RSI is above 50 and the RSI seem to be going up, you will see that the price is in a good uptrend. See, the RSI is following the price and it's above 50, so you are in a nice uptrend. Here also it is basically hanging around in the oversold zone, but still it is above 50 and it's not come down. When it starts to come down, obviously you are looking at the charts also, you see that it's come down. So obviously you will take corrective action if you because you're in a long position, you bought it somewhere here, wherever on base on your strategy. And when you see the price coming down, for you first look at the chart, then you look at all the other parameters that you need to, and then take a decision. RSI will just help you. RSI is sort of like your water bottle. All indicators are like your water bottle, your snacks. Uh, they help you to, let's say, trading is like going for a run. So you have a hat, you have you have a hat, you have your goggles, you have your music, you have you have your shoes, you have water, you have some snacks that you need to have. All these are assume like all of these are your indicators. They are, but the main thing is your body. Your body basically is the one that's going to be the running. Your shoes, your cap, your goggles, your water, your snacks are just going to help you run. But the main running, the main activity is done by the human, by the person. So what do I mean by when I say the person? Meaning, first pay attention to the chart, then to various chart patterns, support and resistance, trend line, where the price is going, where it is in relation to where it was earlier, where was your entry, what is your stop loss, what is your target, where are the moving averages, what is the volume, and look at the RSI as well. Remember, and do not trade solely on the basis of any single indicator or you're going to end up losing money. And since you're with me, I want you to make money and become financially free. It's going to take some time, but slowly and steadily over a period of time, I want all of you guys to be financially free, all you guys and gals. So here I've showed you regular divergence. I've shown you the oversold and overbought, which you can tweak. I have used an EMA instead of the SMA because EMA reacts faster to price. So I have chosen EMA. You can also choose to use the EMA or SMA, up to you. But I choose the EMA. And also, there is one more thing that I want to tell you. When RSI is between 40 and 80, it is considered to be bullish. Between 40 and 80, RSI is considered to be bullish. And between 60 and 20, RSI is considered to be bearish. So remember, 40 to 80 bullish when the RSI is going up and is as between 40 and 80, and when RSI is coming down and it's between 60 and 20, it's considered to be bearish. And above 50 is bullish. Once it comes down below 50, it is obviously bearish and it will be between the 60 and 20 zone. So you're obviously in a downtrend. Of course, it can change at any time, but remember, RSI above 50, you're good to go for a long, depending on other factors. And RSI below 50, preferably don't go in for a long unless there are some other compelling factors. So I have shown you what RSI is. RSI basically is a trend following indicator. It is an oscillator. Oscillator meaning it bounces between 0 and 100, 0 and 100, 0 and 100, 0 and 100. You will very rarely see it at 0 or at 100, because market participants are following market psychology, and indicators, moving averages, trend line, support, chart patterns, candlestick patterns work because common people look at common things and they do the same thing again and again. For example, 99 people out of 100, if they see a line in front of them on a busy street in any city, they are going to run unless they are God. And I think they are not God. So 99 out of 100 are going to run when they see a line in front of them, right? And they don't have a gun in hand, they don't have a machine gun, they're just ordinary humans like you and me. So similarly, when people see that the RSI is cross 70 or cross 70 on the way up, or crossed going down below 30, people are going to start selling when it goes below 30, or they may decide that it is oversold, they may start buying. So similarly, when price is over 80, people will start selling because they think it's oversold, other people will sell. Let's make some profit with our existing position before the price comes down. So once it goes above 70, you need to be very careful with your stop loss, start trailing it. And if you are holding a position and it goes below 30, or if you're not holding and it goes below 30, you can start watching for the price to go up, and you'll just watch, keep it and add it in your watch list. Do not buy just because the price of a security is oversold, and do not sell simply because the price is overbought. Remember, price can remain overbought, meaning above 70 or 80, for a very, very long time, weeks, months. And if the security is very strong, it may do so even for years. Similarly, if the price is oversold, price RSI below 30 may remain for long periods of time. So do not trade solely on the basis of this. Now, I have told you to the best of my ability what I know about the RSI and how to use it, how to tweak the indicator, how to see whether there is a divergence. Remember, this is going to help you give an early warning of what may happen. Do not trade simply on the basis of regular divergence also. This will help you. You need to consider the whole chart. I hope you had a good learning experience, and I'll see you in the next session. Thank you for watching. All the best.